You're listening to a new episode of the FinTech Australia Podcast. Before we dive in, just a quick shout out. Intersect is Australia's most thought-provoking fintech festival, bringing together the industry's leading founders, investors, innovators, and decision-makers for 2 days of insights, connections, and big ideas shaping the future of Australia's digital economy. This year, it's happening September 3rd and 4th at the Crown Promenade in Melbourne. And it's shaping up to be a big one. If you haven't got your ticket yet, now's the time to get involved. Tickets are live now at intersectfestival.com. Go to intersectfestival.com and guarantee your spot before they're gone.
Okay, here we are this morning with FinTech Australia and the podcast, and we're going to be talking about the scam prevention framework that has been being built over the last, 2 years? Yeah, thereabouts. I'm Rob Neely. I am the founder of Securely, which is a fintech, paytech, identity tech play out of Noosa, Australia. And we are taking our technologies globally, and we deal with all of the big banks and identity players around the world. And with me today, we've got two great people on the podcast as well. We have Claire McKay, who's the Assistant Secretary at Payments and Scams and the Innovation Branch from Treasury Australia. Say hello.
Hello, everyone.
Claire, tell us a bit about yourself and how you got to this very, very esteemed position.
Thank you very much. Yes, as you said, Claire McKay. I look after the Payment Scams and Innovation Branch in Treasury. I've been in Treasury for, I think, about 8 years now. In various roles across, digital, financial system, things like that. About a year ago, they gave me this, I would like to say, exciting role. I think it's probably a bit more of a challenging role.
Was that a promotion or not?
I do ask them that every day. But fortunately, I have a great team who is actually doing all the heavy lifting. I guess the key thing is we are supporting the minister as he is trying to make the key implementation decisions to bring about the scams prevention framework. So it has, the key thing, it will go live on the 31st of March next year, and we are just trying to make the final instruments.
Yeah.
Exactly, we'll call it touch-ups. I'm not sure the industry see it as touch-ups, but we're in the thick of it right now.
Yeah, no, it's great, and congratulations, well done. Bianca Bates, Chief Executive Officer at Monoova, and I think you're new.
I am 1 month into the role.
1 month, right. Tell us all about it and what you did previously and how you got to here today.
Yeah, so great to be joining you today. I'm the CEO of Monoova, and whilst I'm very new to the role, I'm very familiar with banking and finance and payments, having spent a decade at Cuscal and then a few years at Smart Group. Monoova helps Australian businesses move money simply, securely, and in real time. We're a payment service provider, and since 2017, we've processed about $200 billion worth of payments, and we're a leader when it comes to pay-to payment processing.
Fantastic. Congratulations. Are you enjoying the first month?
I am loving it. Thank you.
Terrific. Good. So we'll get to the topic today, which is really, really exciting. It's certainly straight out of my playbook. Securely was actually started to stop scams 6 years ago, and to see the change in the last 6 years is just quite incredible. Scams at the moment, just to provide a bit of commentary, it's said that scams are running around the world at about $1 trillion at the moment, which is quite an extraordinary amount. I know certainly when the ACCC 3 or 4 years ago came out and said, we've identified $3 billion of losses, our company actually ran some survey work of 1,000 Australians. We found out that it was more like $9 billion because only 30% of people actually go to report it because, they're embarrassed. They don't want to tell their family. So it's a massive, massive problem. And of course, we'll set the framework here. We're going to talk about the scam prevention framework, which the Australian government's going to bring in to help educate and also solve the problems. But overall, if it's $1 trillion now, I think what we'll be looking at realistically, once agentic AI and the other areas of digitisation really kick in, and also with quantum computing, it could really go crazy. So this framework right now is dearly needed. So let's get into it. We'll ask you, Claire. What sort of information are you getting to feed the department as to how the scams are occurring? Are you using banks? Is that where the information is coming from?
So I think definitely, it's a great question. We, you will have seen earlier this year, the National Anti-Scam Centre, they do a report every year and they released it. They are a very valuable source of information. They get information from everywhere. We will then also get updates from the banks, and we're continually asking them to see where are the trends going, how are they changing. It was really interesting to see in the NASC report this year that, we had a few years where actually we saw, scams were kind of trending down, and I think that was, symbolic of the fact that, maybe people saw the framework was coming in, they started taking action. Unfortunately, this year I think we saw scam losses went up again, and that's probably symbolic of the fact that scammers are going to, they will evolve, they'll move to different areas, and that was exactly what the report seemed to show, was actually that we saw it moving to different areas of the economy. And when we're talking to banks, that's actually what some of the data is starting to show. So they will send through where some of the typologies are coming from, how a scam trend's starting to change. Are they moving into different areas? And so it is really interesting to kind of inform what are the kind of measures that we want to put in, particularly when we're bringing about a prevention framework, because that is ultimately what this framework is trying to do. We are trying to bring about a prevention framework.
Yeah. I'll go straight across to Bianca now, and you've only been a month in the job. What sort of, is it a big number you're seeing coming through Monoova in transactions? I'm not talking about dollars wise, but are you seeing fraudulent transactions? Are they a big number there?
Yeah, I think the whole financial services ecosystem in Australia is seeing a large number of scams that we are we see the scam prevention framework as a very welcome addition to the control environment, the regulatory landscape, to prevent scams because fraud and scams, because they are on the increase. I think it's important, we've talked a little bit about the financial services and what we see, but I think if you think about any given scam or fraud, it generally starts way before the payment is involved. Often can start months, if not a year before, when identity is stolen, and then the scam kicks off later on through, it could be an SMS or it could be through a digital platform where the scammers are looking to break down, effectively build trust, misplaced trust, and then eventually a payment is requested and unfortunately made. And often the consumer believes that they're making a very legitimate transaction. So I think it's important for us to look at the financial services data and the payments data, but I think as this framework envisages, in order for us to really collectively do something about it, it's going to require looking at a lot more data and looking at it really frequently.
Yeah. Look, I asked the question because I know, and it's been discussed openly. The CommBank has said, Matt Coman in both of his last AGM notes said that the CommBank's spending around $970 million a year on their scam and fraud department, and that they have about 4,000 people working in that department. Right, so that gives you the size. So when we talk about $3 billion, if they're spending $1 billion, we certainly know that it's a much bigger number, and it's also, I think it's not just a widely reported number, but an acknowledged number that up to 80% of the scams are coming out of Meta platforms. Right, and that's certainly the discussions that I've had with the industry insiders, both here and also overseas. It's no different anywhere else, by the way. The social media platforms are the ones where the scams are starting. You were talking about it starts a lot earlier. Yeah, sure. And for the viewers and for the people listening in, to give you an idea, following on from what you were talking about with that's the thought goes into it. There are ladies and men sitting at their kitchen table in Australia at the moment, and all they do all day is run scams on the internet. Now, this can be Auntie, Jackie from Dubbo, or someone from Cessnock, or someone from Melbourne, and all they're doing is taking deposits, and they're taking $70 deposits, but they might take it 10 times a day from someone. And of course, you can't complain to the police about it and get that $70 back, so they don't go to the police. But if you think about it, if they're doing that $700 a day, it's almost $200,000 a year. It's not a bad earn, and that's why they're doing it, because there isn't the scam prevention framework up until now, and this is why we need this solution and acknowledgement by government.
I think what's interesting to the thing that you said, like there's a couple of things there. One, what we saw in the data last year is definitely the communication channels for how they're approaching people have changed. So it is definitely moving to more digital and online channels. Like it is definitely the digital platforms that we've seen that. And so, and that's definitely acknowledged with where we've focused the SPF in the initial sectors. And I think the second one, and we really try to communicate this, and sometimes it just doesn't resonate, is anyone can be a victim of a scam. And I think sometimes that message doesn't always land, because, some people, when they hear about scams, they just go, no, I will never be a victim of a scam. But like these people are very sophisticated at committing scams. Like it's all they do, and they will actually get you when you are most vulnerable, or their whole job is to try and get you into a state of being worked up or a sense of emergency or something like that, so then actually they can catch you out and they can get money off you. And that's what they do. They will just spend all of their time trying to get money off you. And so that's why we need this prevention framework, is because, people actually aren't prepared for when they're going to get approached for money.
Yeah. Bianca, Monoova, how many people you got there? What's your head count at Monoova?
We've got 85 people at Monoova, and in the last 2 years we've doubled our head count managing risks and scams. Absolutely.
Right.
I think, we're obviously not at that scale that you talked about with the Commonwealth Bank, but from our perspective, we've doubled that, and we've also sort of acknowledged as an organisation the investment that's going to be required. It's sort of not done. So whilst we have doubled headcount, we're also looking at what we need to do, particularly as, we're really excited about the increased collaboration, cooperation and communication that will come about through the scam prevention framework, and really thinking about how we need to start building muscle now to be able to respond and cooperate.
Yeah, it's interesting. Look, we deal with banks all around the world, and especially in India at the moment. We're doing a lot of work in India with the Reserve Bank of India and the NPCI through the UPI. And some of the banks you go into and you talk to them, a small bank in India might have 30 or 40 million customers, whereas the large ones are in the hundreds of millions, and the SBI, the State Bank of India, is at 700 or 800 million, right? So it's a different sort of area, but we can go from boardroom to boardroom, and one boardroom will be saying, oh yes, no, we're investing an enormous amount in it because it's concerning that our customers are losing them. It's not the bank losing the money, of course, it's the customer losing the money, right? And then you'll go into another boardroom and they've got one person working. And that's exactly what we're seeing over there. But what we are seeing with these new frameworks coming around the world, and it's not just in Australia, it's also in other countries, and governments are starting to recognise they need to do something about it, because again, it is their citizens are losing the money, right? And people, unfortunately, the really terrible side of scams is it's not just money. People quite often, go to drastic measures because of the embarrassment. And I don't want to talk about it, but it's not just depression that we see. It just being scammed. Whether it's another great example is the romance scams, right? Now that's devastating because you've been tricked twice, right? Your love's been taken potentially once you realise the scam is there, and also your money's been taken. So it's really, really devastating. So. It's interesting. I think globally speaking, everywhere where fast settlement services have come in, you can see as the fast settlement services have tracked up, the scams have tracked up linearly. So as an example, FedNow came into the US last year or the year before, and their scams were running at around 12 billion at the time, right? And I said to some people over there, I said, you wait to see what happens this year. And of course it went to 90 billion, right? Because what they rely on is the speed. Yeah. So how will the scam prevention framework help in that respect, do you think?
You're listening to the FinTech Australia podcast. This season is sponsored by Vanta. Vanta is the leading trust management platform, helping fintech businesses get compliant fast for frameworks like CPS 234, SOC 2, ISO 27001, and more. Vanta's AI and automation power everything, from evidence collection and continuous monitoring to security reviews and vendor risk, whether you're starting up or scaling.
So I think definitely one of the things that we're looking at is what are the necessary frictions? I think that's what it goes to, that needs to come in through the scam prevention framework to try and respond to the risk of scams. And I think, it is the having a fast payment system, there are benefits to it. People were very excited when we have it. There are a lot of benefits, being able to move money instantly. It's fantastic. We definitely don't want to, completely reverse all of that. And so we often say we don't want to bring the payment system to a complete halt. But there is probably a necessary level of friction that will need to be brought in certain instances. And so it is looking at what kind of obligations can be put on entities to consider what they can be doing to bring about those necessary frictions. And this is one of those things that we actually have been grappling with when we've been trying to write it, because there's certain ones which are quite easy. Like there's certain prescriptions where it's saying, if you're getting told I've been scammed, you need to get that recall request off instantly. Don't be waiting around a couple of days. Let's get that off instantly, and we can be putting quite prescriptive requests. The one that's been a little bit harder and we've been really trying to work through with the banks is how will they work to identify what are those high risk transactions where they should be considering putting the frictions on. And we do think they are the ones that are probably best to understand what is a high-risk transaction. They're the ones that are engaging with customers. They have insights. They see all of the information. They're sitting on large amounts of data. So what can they do to be doing it? And then when they put all of these indicators together, they go, maybe I need to be asking my customer a few extra questions. And that's what we're trying to work through, and how can the framework do that best. Yeah, but we want to do that in a measured way so that it's not about bringing everything to a halt. It's about bringing the right kind of transactions to put a little bit of extra friction.
Bianca, Monoova was founded on taking friction away, wasn't it?
Yeah, but risk-based, in a risk-based way, I would say. And I think sort of just to the question that Claire really aptly answered as it relates to banking, I think from our perspective, what we think will be a very meaningful change is that we'll be looking at the right information before the payment is even requested. So giving the banks and payment service providers like Monoova more notice that there has been a fake ad on social media, or that there has been a phishing blast sent out by SMS. That gives you, it could be days, it could be months, it actually could stop the scam happening altogether. But I think getting more time to understand what has happened in the ecosystem will lead to reduced scams. And then, as you said, the controls that payment service providers like Monoova put in place, which obviously starts with knowing your customer and making sure that our clients understand who their customers are or business clients are. So sort of starting from there, making sure the right monitoring is in place. From our perspective, what we need to be doing is looking at whether there are suspicious trends happening with payment flows, and then communicating. I mean, if the banking ecosystem is communicating, as Claire said, if the bank is probably the best place to know if there is unusual activity happening at the customer level, making sure that information, that actionable insight is shared so that people can act quickly and stop payments. But I think it's really critical that whilst Monoova is about making faster payments, it's not about faster and less secure. It's actually got to be both of those things. So we do have risk-based control environment where higher risk transactions based on all of the information we have to date, and it changes multiple times a day. We're using that to make the right risk-based controls and the right friction points.
Let's dig into that. I just want to what you both just talked about. So 2 or 3 years ago, the problem was the banks couldn't talk to each other about the data privacy, right? So even when a scam was reported, the payee or the recipient bank couldn't actually let the other bank know. And this was discussed at a Ping conference or a Stripe conference, I think, where there was a speaker. What have we done to fix that? Have we been able to get around it?
This is the never-ending question and never-ending debate, I do believe. So, I think for us, data and intelligence is definitely key to this framework. It kind of essentially flows through the whole framework to say we need intelligence sharing, and we don't just need it sharing within one sector. We need it sharing across the sectors. Bianca just made that point. It's not just about banks being able to share this BSB with another bank. It's about being able to say this website, or something like that, and getting that across to the digital platforms and things like that. So the scale of kind of the intelligence sharing that we want to be able to set up between these sectors is, I think, daunting at times that we're trying to talk about. I do think so. The framework does establish that. So I will say the framework does establish that we want information sharing. We are engaging, I think, with all of the entities involved at the moment to do it. So NASC, the National Anti-Scam Centre, has been doing that quite a lot for the last 6 months, and we're kicking off a process now. I would say entities are quite willing. You would have said that they've been doing that for 3 years. The thing I think that's always been a little bit of the tension is, yes, things like Privacy Act and that do get raised. I will say I don't think they're insurmountable. We do have pathways through them, particularly for, law enforcement. We wrote that into the Act to make sure for these reasons that we can get around that for, I don't want to say get around the Privacy Act. That's a bad way of saying it, but making sure it's not a limiter.
Yeah.
I think what we actually really need to make sure that is that there's actually sufficient industry, I guess, appetite, to actually do this. We recognise it's a hard task. We do recognise it will need investment. And I think just at the moment, the scale of kind of the compliance issue that they're actually facing just means that there probably hasn't been enough motivation to go ahead with it. We are kind of hoping that this framework actually gives them the motivation to all come together to actually deliver on it. But I would say there is definitely within government, if they are finding tangible barriers within the legislation, we are here to say, let's get those barriers out of your way.
Yeah. So I'd like to pick up on a thread there as well. My dad said to me, bless his heart, many, many years ago, decades ago, in fact, he said, don't ever get between a banker and a dollar. Right. And I think that what the Scam Prevention Framework is actually providing now is that there will be a tripartite view of who's going to repay these scams, right, if they are found to be legitimate. And I know you've got the various levels attached to it, but fundamentally, for those listening, we're talking about the banks will be paying a third, potentially a third. The platforms, the online platforms, what they call the VLOPs, the very large online platforms, will be paying a third, and the telcos will, right?
So fundamentally, we've done equal apportionment, and so it is essentially however many parties are subject to the scam, it will be apportioned equally between them. Yes,
Right.
so that is the correct way.
So here's a bit of an anecdote. I was sitting in London 2 or 3 weeks ago, and I'm sitting with some really high level telco people. And they were talking about one of our orchestrations that we license around the world, which is called social media identity securitization, right? And they kept telling me in this discussion, and this has been going on for 12 months, this discussion, really high-level guys, and they said, look, we don't have to repay anything because everything's encrypted. We don't see anything, right? And that was their argument as to why they shouldn't have to pay. And my point was, and it was in one of those hoity restaurants, the private clubs where they do everything in London. And my point was, well, yeah, but guys, you know what happens on these devices, right? This is what's driving the scams, okay? And if you know this occurs, then you have a duty of care to actually act on it. And they argued with me black and blue that they shouldn't be paying because Britain's got the same sort of legislation, right? And then, of course, Tim Cook comes out 2 weeks later and says, we're going to put a new facility in the next iOS where under 16s can't sign their friends on unless their mother or father allows it to. So they're now they're now accepting that these phones, right, are the problem, and they are part of the problem. So all of a sudden that view of, we're not part of it, and I'm sure you've heard it. I'm sure you've heard the telco saying, we've got nothing to do with this. Well, that's not true, right? And we'll talk about SIMs later because that's the next frontier. But
I think that's a really great point. And if you put those two threads together where there are privacy issues and we do need to make sure that we're being compliant holistically to all regulations. But I think certainly if I look at the banking and payments side of things, notwithstanding those restrictions being in place, there's still a lot of value in the trend information or the different topologies of frauds and scams that are coming about. Every day, multiple times a day, there's
Absolutely.
a change.
Yeah.
And so I think sort of saying, your example of the telco saying, I can't do anything about it because I think that regardless of what challenges and constraints there are, I think information sharing, even at the trend level, is critical. And any one party in that burying their head in the sand and saying, I can't or I shouldn't have to, I think is really going to bring us all down because this is an ecosystem problem, and the more information that can be shared, the better we're going to do at preventing.
Absolutely, and downstream as well.
Exactly.
So we've got to get around that particular issue. It sounds like you're working on it.
Yeah, and I'd say, one of the things that we've also really realised through the information sharing is, and I think it goes to the point you were making, is the information you hold, it might not be relevant to you, but it's definitely relevant to the other players in the system because they're the ones who are able to act on it to prevent scams. And so people have just been kind of taking an approach of, yes, I have a piece of info, but I can't do anything with it. And so, that's... I've extinguished my responsibilities, but it's like, yes, if you got this piece of information into the hands of someone else, they would be able to prevent scams. And so we will put an obligation on you to get that info into the hands of someone else so they can prevent scams.
Yeah, it's a great example. And I think your website example was a perfect. That information can be shared across banks and partners, that there is a particular website or there is a particular ad that's creating consumer harm, consumer loss. Sharing that kind of information is possible. And so I think we need to move from where an individual bank or an individual entity is looking at how they can minimise loss for their customers and consumers to making sure that we're doing that at an ecosystem level.
Bianca, do you think the government is heading in the right direction with it? Would you, if it was your wand, if you were sitting in Claire's seat, what would you add to it?
The only thing I would add to it is, because we very much welcome this framework and this concept of greater ecosystem collaboration. The only thing I would add is consumer education. And I know that scams will change, and once something stops working, something else pops up. It's like that whack-a-mole game. So I think consumer education is really important. And I think making that more of the story, like when you hear journalists talking about frauds and scams, it's really pointing the finger at the banks and what more they could have done, and not looking at the larger ecosystem play, but also sort of making consumers more aware of how they can protect themselves. That's the only thing that I think, and media plays a role in that. I'm not suggesting the government's not doing what they should be, because I think we are seeing a lot of visibility of what's happening in this space. But I think for consumers just to be more educated on how they can help themselves. And as Claire said, it's not just sort of a particular segment of Australians that are getting scammed. It's everyone. So it's not an easy thing to do, but I think it's a really critical point.
The numbers were in previous years, it was certainly the people over 50 and 60 were the ones that were getting the greater amount of scams, but now it seems to have changed. Now seems to be a lot of people in their 20s being scammed as well. I agree with the point about education, and I've been banging on about this for years, to the point where I'm sure NASC is sick to death of me. But, I've been saying for years that there should be like a slip, slop, slap advertising program run, or the 0.05 program run. They're all for consumer behaviour and to help people understand how to mitigate the various risks. So, I know it's not part of the scam prevention framework, but what are your thoughts on that? I mean, do we need to lobby the government more about actually providing the information?
I think personally I prefer when people don't lobby the government, just because it makes more work for me. So I'm just going to say that as a personal interest. Look, I think, there is campaigns. I believe it's Stop, Check, Protect. I'm going to maybe lose my job if I got that one wrong.
No, it's pretty right.
Okay, cool, yeah. Perfect. So I would say, when we do talk about it as it's a whole of economy framework and everyone has a role to play, I don't disagree. It is, everyone has a role to play. And I do think sometimes the narrative does get a little bit lost, that we actually forget the people that we need to be against are actually the scammers, not the people that are trying to take the action to prevent, detect and disrupt the scams. And so sometimes that does get a little bit lost in the narrative. We do, we do try to think about what are all the actions that can be done in it, and some of that is on the consumer side of it as well. So it is a very valid point that gets put forward in it, but it is also just goes to that one of from the awareness point of view, how much does it work when you just need one person, or they're spraying everyone, and you almost only need a 1% success rate, and they just make so much money off of it, which is why there has been so much focus on getting this scam framework in place. But it is always a very valid point that gets put forward about what happens on the consumer awareness side.
I'll give you some more intelligence. I was given in America, or in New York, at a recent trip from one of the larger financial firms over there. They said, Rob, before you go, and I sort of see them every 3 months, but before you go, we just want to let you know that we have information, and it sounded like it came from the CIA or something, that the South American drug cartels, right, are now building data centres to run as scam and sim scam centres, right, to defraud people. So as if they're not making enough money out of cocaine and all the other stuff that they do, they're now going into data centres because they can do it with agentic AI. They don't need thousands of employees like the old scam centres in Dubai, and I shouldn't have mentioned Dubai, but in various countries around the world, right, where they used to have thousands of people working 3 8-hour shift non-stop, billeting the beds just to make phone calls and start the scams. And that brings me to my next point. Is it the weakest link? Is that where we probably should be focusing? I mean, the SPF's really good. We've all gone through various rounds of providing information back to you guys to interpret and then implement, or otherwise, right? But do we need to go back 1 or 2 steps? Is the weakest link the social media platforms because there's no KYC? You were mentioning KYC before. Now, there's no KYC on any social media platform. There are governments around the world that are moving towards it. We've seen the Australian under 16 requirement, which is just fantastic, and many countries, including the EU, are now adopting that. And most importantly, 2 states in America have now adopted it, Texas and Illinois, overnight, which is great. But that's a form of KYC, if you think about it, at the rawest level of, are you over or under 16? And if you're under 16, you shouldn't be on this, this device, on this platform. So is it really, and it goes to dating services as well, and we'll get to that in a minute, right? You're not going to get away with it yet.
I can never get through anything without dating apps coming up.
But it seems that, not seems, it is very, very clear that the world is broken into 2 parts from my perspective, and that is we have the banks that have 100 years of KYC behind it. I mean, it's fantastic what we've got now. It really is, and it's only going to get better, right? And then we've got this other massive industry with the same people that are in the banks, and there's no KYC. You can be Bugs Bunny, you can be whoever you want, and that's where it starts. So I'm going back to the weakest link now. So with bringing in the social media platforms into that discussion, right, under the SPF, what discussions have you had that you can talk about here where they're acknowledging, and we've all heard various comments about the under 16 acknowledgements and or comments from Musk and so forth. But what are they thinking now? I mean, where are they going with it, Claire?
So maybe I'll just touch on, so I may maybe even preempt some things. So obviously we started with the initial sectors that we did because, at the time we've focused on the greatest scam vectors that, as they currently exist, and it will respond to the majority of harms, that as they are. That's not to say it is all the scam harms. We even acknowledge that, but you do need to start somewhere. We've got certain digital, we call it select digital platforms that are coming in. So I think it's paid search, instant messaging, and social media. And we're currently working through, obviously they have, at a high level, they've got their reasonable steps obligations that are on them. And we're working through specifically what do those reasonable step obligations look like. Some of the the specific obligations that we're working through, and I will say it's going to be an iterative process as we try and understand the systems. There is a lot of focus on the ads. Advertisements. Advertisements. Sorry, because we do know that that's what causes a lot of the harm, right? And I think if people did read the codes that we put out for consultation, and obviously we are working through feedback on consultation, and we're doing some changes through the drafting process. And I always say everything is subject to the minister's decision, but we are working on what should say the paid search firms or the social media platforms have to do to undertake verification of their paid ads. They are getting paid for them. So the actual providers of it, then what are the steps that they should be doing to, check the ads before they put them up, and then the ongoing, make sure that they're pulling them down.
Let's call it as it is.
I was going to say I wasn't necessarily going to comment on their current behaviour, but these will be the obligations that will be put on them, after 1 April. And, we do know that is a massive vector for scams, and so that is why there's been a lot of focus, and you'll see that there are quite prescriptive obligations particularly targeted to that area. And we've actually seen then other countries are starting to come out to focus in that area as well, which is actually quite good. So that's been a lot of the focus, and then we'll put general obligations on other content that is coming up on social media. But I do think it does go to what users should actually have verification requirements put on them, and maybe absolutely. It won't be actually to the same level as a KYC because it's not quite the same as financial fraud. But it does. If you are going to do a financial services ad, maybe you should have to verify yourself before.
I've got a number for you. Yeah. So Juniper Research, which is a European research company that works in paytech and fintech in those areas in identity, they came out, I think it was a month ago or so, it might have been 6 weeks ago, and they came out and they said, and I'll stand to be corrected, but it was these rough numbers. They said, we're reporting today that, and the biggest firm, Meta, took over $900 million in advertising revenue for Europe alone for fake financial services ads, knowing they were taking it, because Juniper was saying we could work out that it was, so they could and not have taken it. So again, it comes back to that first link, doesn't it? The broken link, and it makes it hard for downstream, right? If they're doing this, it creates a problem for you. Whereas if we push a little bit harder, like we have done with the under 16 thing, none of them liked it, right? They all came out and said, "Oh no, goodness gracious," right? But the fact is, the world's now recognising it, and going back to KYC, I'll get back to the point again. About 3 or 4 months ago, a government you wouldn't really recognise that would be doing this, but a government in Vietnam, the Vietnamese government came out and said we are putting through legislation that by the end of this calendar year, 2026, every social media profile needs to be attached to the VNE ID, right? So in other words, the digital ID, the electronic ID. Because they've got another country right beside them that's known to be a scam vector, being in Cambodia. So the way they're working it about fixing that link, stopping it, right? Now, I'm not suggesting we do that in Australia, but these are the discussions that we probably need to be moving forward. Have you talked about KYC? I mean, Bianca brought it up before. Have you talked about KYC and social media profiles?
I would encourage people to look at what went out for consultation. And I would say there is a vexed conversation in Australia about the amount of information that digital platforms should also be able to hold on individuals. And so we're obviously always balancing those two things.
I love that discussion though. You know what we're talking about? People go, I don't want my bank to know, I don't want the government to know about my social media profile. I mean, what are they thinking? Seriously. They go to their dentist, they give all their information. They go to wherever you go, you're giving your information, but oh no, we don't want it to be given to the social media companies or to have anyone attachment. That just says one thing though, doesn't it? It says that they want to act in a way that they don't necessarily want to be linked to. And that's a thought process of our citizens that is, I find, quite astounding. And then, of course, because they have that mandate, then we have a scam problem. Yeah. What are your thoughts on it?
I mean, I 100% agree with you about the weakest link. And I think the banking sector in Australia is heavily regulated and takes those regulations very seriously. When it comes to social media platforms and telcos, I think a great example actually for the telcos in a similar vein is the SMS sender ID register. I mean, I think so that's a great example of bringing in some level of verification so people know, is this a verified number or unverified? I think that's a brilliant example of where you put in more controls than were necessarily there. But the weakest link will always be, that part of the ecosystem that isn't required by regulation with consequence to do something to make the ecosystem stronger. And I think we would certainly champion to strengthen the broader ecosystem in the way
Excellent.
you talked
That's
about.
One vote, plus
yeah.
I'm another, it's two.
Yeah.
Right.
Not saying we're going to lobby or anything.
We'll get all the votes put together and then we'll give you a call. Look, it is a vexed issue, but I think at the end of the day, identity is going to be the key to all of this, and we are going to have to marry up where the scams are coming from, which are social media sites. Let's face it. I mean, they're also coming from elsewhere, but fundamentally, that's the vertical that they're coming from. So let's talk about. We haven't got a lot of time. We've been chatting away, but let's talk about where we're going. Would you like to talk about that? What agentic AI and eSIMs are going to bring to us. And I'll give the listeners an example. Europol a couple of weeks ago, again, maybe a couple of months ago now, they came out and said, we're just letting everyone know that we raided a SIM farm last year, somewhere in Europe. They wouldn't say where. The SIM farm had 7 employees, right? And they were all just engineers. And there were 1,400 SIM boxes. And 20,000 SIMs were being operated in those SIM boxes, because all you need to do for a social media profile is to have a SIM. If you think about it, that comes back to telcos, right? and there's no identity on SIMs to speak of. But most worryingly, what they wanted to tell everyone was there were 49 million social media profiles being run out of those SIMs with 7 people running it. Now, they're obviously using agentic AI as well, or AI agents to run those SIMs. But when you put the two together, when you think about it, so an agent can do 100 times faster what any human can do in an hour, right? So they're starting the scam, and then of course it gets handed off to the next agent, and you can have 10 agents, you can run a whole scam centre, right? What have we contemplated? Have we thought about? Has the SPF thought about the future?
I'd like to think we're not just building a framework for today. I'd like to say that. Can I guarantee it? No. So the provisions, obviously, it's a reasonable steps framework, and the provisions are meant to kind of evolve over time, and I say that as in they're meant to evolve as scams evolve. And meaning that entities should be considering how scammers are, using different technologies, are changing how the threat landscape are changing. While there are some very prescriptive obligations, there are lots of these kind of system-wide obligations where entities should be constantly reviewing their system, their processes, their scam, like how they're undertaking, reviewing, like what threat intel are they receiving? Please update. What are you doing? I think yes, the scammers are using AI, but we also know like entities are as well. So I think that's actually the key thing as well, is that when we're talking to like all our major banks, they're all trying to employ the same technology to combat scams. And so we on our side, we will keep evolving to fight scams, and that's what the framework intends, and that we will have a step change as we go. Will we have to step in and update the obligations? Yes, we probably will, but it does intend that entities will do that themselves. Obviously, it is economy wide. We say to sectors like, please don't wait to be bought in before you start doing it. Like, you should be,
But you had to do that here, though, didn't you?
We did. And so there is, the government has kind of said they will consider what the scam risks are in other sectors. We will see data as it's coming through, and then they will consider that when they bring in other, to identify if other sectors need to be brought in, or which other sectors need to be brought in. And so, and that is the thing. It is a framework that is flexible enough that we can then identify other sectors and we can bring them in as needed. One of the reasons for also starting narrow is it is a complex framework. People refer to it as world leading. That kind of freaks me out a little bit, but there is a lot of complexity to work through, and so we did want to get it right in kind of, I'd say narrowly, but when I say narrowly, we did pick off 3 of the largest sectors in the economy to try and get it right in first, and so then we can add to it over time.
So it just fell off the table. But look, if it is world leading, it makes you the next superstar of globally speaking.
Assuming we don't fail at it. But let's
no, you're not going to fail.
Let's speak positive.
Bianca, how do you see? I mean, first of all, let me ask from an industry, and I know you've only been in the job for a month, but you've got a long history, right? Do you think that there's between the banks and the people that work in payments, the various companies, do you think there's a want to work together? I mean, is there a committee where they meet every quarter to discuss openly what we could do better? What's happening at the ground level?
Definitely all the will in the world, I would say, to cooperate and collaborate and share what information is available. I can tell you about what Monoova does. So we obviously work very closely with Cuscal, who connects many financial institutions and other fintechs to the payment rails. So we collaborate highly with Cuscal to make sure that we're taking their insights that they're seeing in the broader market. There are also formal cadences in place with banks and fintechs, as well as informal. And I think finding the right people within banks and fintechs to know each other and be able to contact each other quickly is like, it's gold, actually. So we invest a lot of time as an organisation at Monoova to attend any given opportunity to engage and share information. And, through those engagements, we've come up with some really great examples of things we've been able to do in our control environment to stop certain topologies. I think also FinTech Australia are just kicking off a FinTech scam fraud prevention committee that is going to effectively formalise how the fintechs can get together and share information. Right. So we're really excited to be co-chairing that new committee that has just started in the last few months. But yeah, I think there are definitely ways to do informal and formal. I would say that all organisations are, when we speak to them, they're really open and willing, all from the smallest to the largest. But I think there is still a bit of siloed thinking happening where organisations are so busy trying to manage their own compliance obligations that to stick your head up and actually share that information more broadly, I think is something, again, that this scam prevention framework is going to really encourage.
Yeah, and that's what it needs, doesn't it?
We're really
I'm glad
excited.
to hear that. That's terrific. I'm going to turn back. We haven't got much time left, but I'm just going to go back to the broken link and pose this question. We've seen the banks through apply 24-hour delays, right? But there's no rhyme nor reason to it through OSCO, right? Is there? I mean, you don't know whether the delay is going to occur or it won't occur. And we're starting to see it's very, very clear in my mind, I should say. Let me just back that up. It's very, very clear in my mind that just about all these scams occur from the first-time transfer of funds from one party to another, because generally they won't get done again and again and again, right? They'll realise the money's gone. So should we use friction? Should we add back friction as a mandate? And this is, I'm not asking you to comment from a Treasury point of view, but just as a thought process. What if we were to add back in on a first-time transfer between two parties that it's held for 24 hours, just first time, and then after that, every other time it'll just go through because we've established that they know each other. I ask it from this point of view that one of the large governments around the world that do an enormous amount of transfers, they know that they've got what they call a good pool and a bad pool. And there's, say, 500 million in the good pool, and then there's 200 million in the bad pool. And so they've already identified it, but they can't stop it. And they're now talking about, they've actually put a position paper out about holding it for 60 minutes, right? Which is probably not enough, but the intent's right. They're saying we need to give people time to think about what they've just done. And when I say people, I'm people that are not aware of scams, and that's what the scamsters rely on. So I'll go to Bianca first. What do you think, Bianca, from an industry point of view? So
from an industry point of view, I guess academically that sounds like something we should think about. However, as we've already said, the criminals will be one step ahead. So the first transaction might be sort of small, inconsequential, and then the next one will be, and I think romance scam's probably another example where it's not
we'll move on to that
going
in a second.
to be the first. So I think we're very much of the view that it does need to be a risk-based approach that's taken. I don't think sort of blanketing that rule is
so
helpful. So
good pool, bad pool again. Where you've got, that these might be shady characters over here.
Yeah.
Is that what you're saying?
And then the counter view to that, I don't know if, I've personally done a house renovation recently, and trying to pay your builders when you're making the first time payment is really hard. Yeah. Actually, it's impossible, and it can make, life very difficult as a consumer. So again, I think we need to be balanced with our view and putting the right risk-based approach, but also acknowledging that the criminals will be one step ahead. So I'm not sure that kind of blanket
they're
rule.
going to iterate
exactly.
without doubt. Yeah, and they do. That's what their job is, right? To be one step ahead of us and the government and everyone else. Can I? Do you want to answer that question, or do you want me to go to the dating site stuff?
So just so I can avoid the dating site stuff. I think what I would just say to that is we did consider a number of these. Like, was there a particular indicator that signalled if you just did this, could you solve scams? And it was interesting to kind of get from, particularly banks, and to actually get the data on that specific transaction. What does that lead to, like, of scams? And it would actually, if you looked at it, the benefit of shutting down, say, first-time payments, and actually the number of scams which are just linked to a first-time payment, actually the correlation would be quite low. So you're actually bringing a large amount of friction into the system for something where actually you didn't have quite a high correlation. And so then I think it does go back to, well, one, if the scammers just evolve, so then they just change how they interact with individuals, so then it actually becomes that the large amount of money comes out on the second payment, then you've actually brought in friction for no reason. But then you're also shutting down a lot of just use cases where actually money just needs to move for reasons. And the other thing that we do think about is what happens to consumer behaviour. So one of the things that we've had to think about is, and so this does go to the consumer awareness piece, but maybe on the other side of it, where consumers are just getting too many warnings, but the other way that they actually get desensitised. And so that they're getting so many warnings about scams that then actually when a scam does happen to them, they actually don't realise they're getting scammed. And so then they just push the money through. And it's amazing actually, like, how many correspondents we've got complaining about their bank, where their bank won't let them move the money because the bank is trying to prevent them from getting scammed. Yeah. No,
look, I totally get it. But again, I want to push back a little bit on that. And I don't know the numbers or that you're talking about, the correlation numbers, right? But if we bring something in to help people stop getting scammed, and we think, oh well, we won't do it because the criminals will just iterate, then that doesn't mean we're making their life easy. We should be making it hard for them to iterate, right? And if we can take or put a plug in somewhere, that to me would be common sense. And I get it. My bank, we've got a couple of banks, but one of my banks, and they do a really good job on it. They will send you to even Amazon AWS fees. They're sending me, did you approve this $40 or something like that? So that's what we need. And I think they're doing that probably because of the SPF, right? They're starting to think about it right now. So,
and I think there are some really great examples that do counter that view of needing to put a pause on transactions. There's some, like you, I bank with a couple of different banks, and they've put some really meaningful controls, sending you a notification that's really specific. Like you said, this transaction with this merchant, is that you? Yeah. I get to follow what my kids and my husband are spending their money on a lot, and saying, hang on a minute, what are you spending money on? So, but I do think that there are probably more sensible controls that can be put in place to try and avoid scam than putting that blanket pause.
What are they, Bianca? Come on, tell us.
Well, I think the notifications is one. I think information sharing is another one. I think behavioural monitoring of behaviour. I've seen some really cool use cases where people can see that someone is either nervous or being put under pressure in the way that they're using their phone behaviourally, that is generally indicative of a fraud or a scam. There's endless, but I
signals.
think,
there's lots and lots of signals
so many,
we can use, and we're not using them properly yet, are we?
Exactly.
Right. And digitisation and AI is going to help us do that, but it still comes down to that little bit of friction there, because once the money's there, it goes into a mule account, it's gone, right? So I want to, before we close, right, and I know we're coming up to the end, but so we've got to get into this. I know I was on one of the calls that you led, on the scam prevention framework.
That's dangerous.
Yes, I saw your lovely office. Yeah. Beautiful background. And it did come up. Are you going to put dating sites in, or are you not going to put dating sites in the initial legislation that goes through?
So the first sectors have already been designated.
Yep.
So for digital platforms, that is paid search, instant messaging and social media. So they switch on 31st of March. Dating apps are not part of the initial sectors that have been designated.
There you have it.
I should have said you can read the instrument if you would like to see if dating apps are within scope of one of those three, but that would
Subject
be me.
to ministerial approval.
But the minister has already signed those.
Oh, he has?
He
Right.
has signed the
Okay.
designations for those initial sectors, and so further sectors subject to the SPF will be a matter for government.
Right. Okay.
Yeah.
Okay. So we'll wrap it up quickly. Bianca, what else would you like to bring to the podcast today in a closing note?
My closing note is we really welcome this progress. It's been a long time coming. It won't be easy to operationalise, but Monoova and other payment service providers in Australia are really leaning in to make sure that we can collaborate and cooperate as much as possible.
Yep, and that's certainly from my perspective. I believe it's very, very important what the work that has been done by Claire and her department has been fabulous. So I don't think it stops here. I think we need to have at least a communication amongst the entire sector saying, well, this is what we've got to be looking at in 5 years. I mean, if you think about it, the world's moving so quickly now. We can't have these 5 and 10 year plans. We need to be thinking about, right, we're going to get this done by the end of the year to see what's occurring. So closing, Claire, what would you like to say?
I would actually just like to say thanks to the sector. Like, there's been so much engagement to date on trying to get the SPF up and running. So I'd appreciate their continued support from the sector while we get it up. But also just to say, like, yes, we've designated the first sectors, but that definitely is not the end. Like, you are correct. For sectors that are not in scope, like, there's definitely work to do there. For me, it is the information sharing piece. Like, I do think that is the thing, that if we can get the information sharing right, there is massive benefits that can be done on that kind of prevention side.
I'm sorry, we were wrapping up, but are there still hurdles for the information sharing?
I think we're trying to get information sharing across 3 sectors. So from that point of view, it's how can you actually get data moving across 3 sectors.
All right. Well, it's been a great hour with both you guys. Thank you very much for putting up with me as the moderator. And everyone that's listening in, the government's doing some great work, and hopefully we'll get great results out of it. Thank you both, Claire and Bianca.
Thank you.
Thank you for tuning in for this episode of the FinTech Australia podcast. This season is sponsored by Vanta. Compliance regulations, third-party risk, and customer security demands are all growing and changing fast. Is your manual audit and compliance program actually slowing you down? If you're thinking there must be something more efficient than spreadsheets, screenshots, and all manual processes, you're right. Audits and compliance can be so much easier, while strengthening your security posture and actually driving revenue for your business. Vanta's trust management platform automates key areas of your certification program, including compliance, internal and third-party risk, and customer trust, and streamlines the way you gather and manage information. And the impact is real. The recent IDC analysis found that compliance teams using Vanta are 129% more productive. So you get more time and energy to focus on strengthening your security posture and protecting your business. Vanta. Continuous compliance. How much easier trust can be. Go to vanta.com/FinTech Australia podcast to get started.